Good evening, ladies and gentlemen, and welcome to another video here at Intuition FX. Now, firstly, I hope everyone is well. I hope everyone's had a great trading week last week. Uh, as I mentioned before, personally, it is the end for me. Well, not forever, until January 15th, until mid-Jan, maybe pushing it to the end of Feb. End of Feb, start of Feb, most likely will be in the middle of Jan. But for now, there's not going to be any weekly analysis, anything of that nature. It's just going to be a lesson. So today I'll be going through the market maker buy and sell models, and then I'll have a lesson next Sunday as well. So you'll have four lessons. And before I even go into any of these lessons, before I even start talking and start explaining things and all of that kind of stuff, before I do that, firstly, I just want to credit ICT. Um, you know, he's probably never going to listen to this, but I don't want anyone sitting here thinking that I'm claiming to have made this or to have discovered this. I absolutely did not. All credits go to ICT on that. So if you haven't watched any of his videos on market maker buy and sell models, trust me, you may not even understand mine. And that's me being completely honest. Like I mentioned, it's best to start from the source first, which is ICT, and then you can use my videos if they're helpful. Um, but yeah, so just wanted to make that clear. Anyways, I will be touching upon market maker buy and sell models today, and that's the main topic. So before I get started, I'd really appreciate if you guys give a thumbs up to the video, share it. I really want this video to do some decent amount of views, you know. I think it's going to be really informative for everyone. So let's just get straight into it. Now, a while back, well, this is from 2021 December. I used to make a lot of PDFs. I do want to go back into this mode next year. Again, this was a trade I actually did take on an account, which I would have shown at that time as well. So I don't just randomly make PDFs on hindsight. These would have been PDFs in, well, after it was in hindsight, but the same trade was taken. So I just want to talk about how I even go about a market maker buy and sell model, because to a lot of people, they're so used to the 1 minute time frame, 5 minute time frame for what I've been showing. I've been showing so much of 1 minute and 5 minute time frames for market maker buy and sell models. You guys kind of forgot how it looks like on a 4 hour chart, and sometimes even I just get bamboozled by it. And then you realize you're like, it's the same thing, but the 1 minute is just much quicker, right? Because it's on a minute time frame, and here you guys can see it's on a 4 hour time frame. So you'll see here that we have the turtle soup scenario, smart money reversal over here, lovely stuff. We've got a breaker, fair value gap. That's my buy side liquidity, and you know, obviously I've got my annotations here, but I'm talking about how we've got the breaker, fair value gap. I want price to come into that, and I will look at that on a 1 hour time frame to see what can happen, right? And here you guys will see exactly that, and even how I've mentioned here, during the kill zone, drop down to a 5 minute time frame or a 1 minute time frame, and you'll be able to see things with more clarity, is what I'm saying. I wouldn't just take it straight off the 1 hour time frame. You know, I want to minimize my stop loss, and those, like, again, that was the time where I was really on the 1 minute time frames. Now I've kind of moved up to like 15 minute, I'd say, and sometimes even hourly, because other things in life get in the way. But the same logic applies. So you had the 1 hour order block, you still had the 4 hour fair value gap and the breaker. And this is where it really starts to get fun, you know. You start going on to a lower time frame, like the 5 minute time frame, and you have this small buy side liquidity over here, which is the nearest one possible, right? Instead of the one that we had all the way over here. And this is how I'm going to show you guys, like, there's a lot of moves and a lot of money to be made. If you just go for like short buy side liquidities like that, you don't even need to go for home runs. So as you can see, it comes into the 1 hour order block, and this is during the London kill zone. So you'll see we have the turtle soup scenario, and I've already projected as this to be a breaker. So I'm just waiting for price to show me that run. I won't enter before it. I'll wait for it to show me that run, and boom, here we go. We get that run, exactly what I wanted to see over here. And as soon as price comes into that fair value gap, that's where I'm going to go long, right? That's exactly where I'm going to go long. Not after, not before. I'm going to wait. Unless, like I said, price keeps going, gives me another area to buy from. But again, as you guys can see, 4-hour fair value gap and breaker, 1-hour order block, and now we're inside the kill zone, so we have the fair value gap. As soon as price comes into this, ladies and gentlemen, this is where I am long. Boom, right? Stop loss goes over here, and my take profit goes above this buy over here. And there we go, ladies and gentlemen. We have that buy. Now, so many scenarios to go around this, to be honest. First thing is first, here, what I would do now is completely different to what I did then. Back then, I would have fully closed my position here, okay? Now, where I am today is 2 years later, literally. I would definitely be taking heavy partials at this point over here, and I'll be letting the rest run to the original target over here. That's what I would be doing at 16403, and as you can see here, I got off at 1.15944. So I got out way sooner than I should have, and looking at it now, I definitely would have just taken heavy partials and got out of the trade. Now, I'm going to try my absolute best to find real-time examples because a lot of them happened in the past in the sense that I've shown you guys on Telegram. So I'm going to try get those examples to just break it down for you guys. But here's another example I do have of a market maker sell model, which isn't as obvious as most people would like it to be. Now, we have the, if I'm being completely honest, that is your buy side liquidity, right? We have that run on news, right? Now, a lot of people say, you know, a lot of people trade before news, which I think is absolutely ridiculous. But I do think trading after news, as long as you know what you're doing, I don't think it's that bad of an option. Again, doesn't have to. You don't have to do it on every news. It's only times like this. So we had price. We have the manipulation, which is to the upside over here. Now I'm doing nothing at this point, guys. I am doing absolutely nothing. I am just marking out. Okay, we have London lows and we have Asia lows over here, right? That's what I have marked out. Sorry. Okay, so price manipulates, goes higher. Now I'm waiting to see price go lower, lower, lower. Now by the time it's really just starting to like show me these candles going lower, 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 and I see a fair value gap like this, I tend to disregard this wick. This wick, I just tend to, I have no idea I'm gonna hide this. I tend to just disregard this wick over here. Okay, so I take that wick completely out the equation, and as you guys can see here, there is a fair value gap. Now again, this trade, you should be at what was it, Tuesday the 12th of December. I do actually think I took this trade and it was on my YouTube channel, which I will have to find for you guys. Is this your USD? Yes, it is. 2 weeks ago, would have been on the 12th, right? Let's have a look. Let's have a look. It'll be somewhere, is what I'm trying to say anyway. But yeah, like I said, that's where my short would go. Stop loss would go over here. Take profit. Take profit, I'll be honest, would have been an Asian low, which you never got to. So partials would have been under London, and well, it would have stopped me at a break even. So I'm gonna try and find another example. I'm just gonna go on the Telegram of the trades I have shown you, and I'm gonna go through them to explain the market maker seller buyer model. But really and truly, guys, it's the same thing on every single time frame, right? So if we go into like a higher time frame, and here we are on a daily time frame on dollar index, we have the original consolidation. It looks like we've got that run down, reclaimed block, take that across, fair value gap goes in, and it's just beautiful how this happens. Order block, boom, run down. We've got a 1 hour time frame. Oh, maybe not this pair, but let me have a look. I mean, even on Euro recently, right? I think this was beautiful. So a lot of you ask me, how can we catch these on a 1 hour time frame? You want to catch one shot, one kills, and so many scenarios around that. Now, if you want to catch one shot, one kills, you absolutely need to know the higher time frame. Now, I'm not saying if you trade the lower time frame, you don't need to know the higher time frame. You do. It does make it easier. But when you want to catch these one shot, one kills, explosive moves, you're gonna want another high time frame. You're gonna want news drivers. You want red folder days, right? Now, I say to a lot of people, guys, I don't trade CPI, I don't trade FMC, and I don't trade NFP. Correct, you're absolutely correct. I will not trade 5-10 minutes before these news events. However, if on CPI day it's London Open, and I'm like, okay, this is the low of the week, or this is the low of the day. I will hold my position from London throughout CPI, right? That doesn't mean I traded CPI. I already had my position on a couple hours before, okay? And I will definitely be at break even, and not just. And when I say break even, I don't mean break even by a pip. I mean break even by like 5, 10 pips at least, because slippage and all those kind of things, right? But I will not trade FOMC 10 minutes before, or even half an hour before, anything of that nature, number one. Same with CPI, and especially same with NFP. Post NFP, post FOMC, and post CPI, completely different stories. And you'll see it on ICT's channel. You'll see it on my YouTube channel on the trade section. You'll see post news trades, market maker, sell and buy models. They are quite easy. Again, I don't trade before them, like a minute or two. Anyways, looking at over here. So just briefly going back to the weekly breakdown that I did say, I said this could be a propulsion block, and this is absolutely what happened this week. That was a propulsion block, a down candle on the order block. This last week was expected to be bullish, and that is what I said to you guys on the weekly breakdown. I said, next week I want to see a market maker buy model, and that is exactly what you guys saw, right? Now, this acted at that point as a breakaway gap, as you guys can see over here. I'm not going to touch too much upon them, but if you go onto ICT's channel, there is a video where he talks about grading price swings and how there can be a breakaway gap that forms 25% from start to terminus, and that's pretty much 25%, a quarter of the way through. So a breakaway gap can form, and that is exactly what you guys see over here. So anyways, this is a very nice example of a market maker buyer model. However, personally, I would have struggled to get in here. I would have struggled because I don't like to enter straight off a daily order block. Daily order block instead of weekly order block. Boom, we have that, right? I would have wanted to see price go up, create a fair value gap around this breaker, chop back down into it, and then go higher. We didn't get that. I just had a lot of displacement, and FOMC again, boom, it just went higher. And then after that, guys, it really just got easy. Take these two down candles here, take that across. This down candle here, take that across. Look at that, boom, went higher. And you'll see that that was a trade idea I took, which left me here with 120,000, 20% gain from October 31st, but that's a different point. So let me just go back on the Telegram channel quickly, and let me just what I'll do is let me just move this on the screen for you guys. This is much easier, and I will show you some scenarios. I just find it so much easier to show you guys scenarios on here. I mean, look, here you go, guys. Okay, look, another example here, right? We had a turtle soup scenario. Once I have a turtle soup scenario, I want to see how we trade, and look at how we trade. We trade fast towards the upside. Now, why was my entry here? Now, this is where it gets controversial. This is where it gets interesting. This is where people are going to say, no, that's incorrect. Oh, no, that's not what happens. Or blah. A lot of people are going to say a lot of things, but tell them to push buttons as well, right? Anyways, so as price is moving down into all of these down candles, starting from here, making that the start of the order block, as price is rolling down. So this candle's closed higher. Cool. Number one, that is a good sign to see. Broke structure. Second candle, as it's trading down into this, that's when I'm long. Boom, I'm long. My target was, it will have been previous day high from what I can remember. Should have marked it down there. But there, boom, that's exactly what my trade is, right? And this is what I say. Yes, you can wait for a fair value gap to form, but you don't always have to. And this is where understanding where the market is posed to go is helpful. And as you guys can see, turtle soup scenario, price came down, took that long, boom, got off that high. Let's find another example. Would have been a similar scenario here, 30-minute order block. Again, I did get stopped out before. This candle here, take these candles here. You see me highlighting them here, right? Take this across. Look what it's paired up with over here, and look where I went short. Yeah? Boom. Take out London low. It's very repetitive. You're going to see a lot of this repeated. Again, Euro USD again. This must have been a news release. Went higher, lower. I waited for these candles to go. I said, let me wait, let me wait, let me wait. Waited for this candle to close as well. I said, okay, cool. Boom. Short, short, short. Should not go any higher than this anyway. I don't want to put my stop loss all the way there. Shouldn't go any higher than that. Boom. I just went for there. Done. Again, it's very quick on the 1 minute and 5 minute time frames, right? And that's quite an old picture from what it seems like. Let's have a look. Let's have a look. Let's see. Again, another example right here. I'm not going to talk about the sell side over here, but I am going to talk about the buy side. SMT. Now, I am going to do a lesson on SMT. I know that's due, and that's going to be, I think, next week or the week after, and that's going to help you guys understand a lot about trading, a lot about which pairs to trade. So my normal, I don't want to say it's a rule, but when I see SMT, the pair that does not take out the low or the high is the pair that's going to move faster, or it'll move with ease, is what I'm trying to say. But again, I'm not going to talk about that until we get to the SMT lesson. But anyways, SMT, previous day low taken out, SMT over here, price trades higher. I got in a bit earlier thinking this was an order block. Doesn't matter to me. My stop loss was in where? A very good position. As you can see, I'm marking out the fair value gaps. Boom, over here, comes into the fair value gap. Boom, runs higher. And I kept marking out fair value gaps. If price wanted to retrace, I'm not scared looking at down candles. I'm thinking, yeah, okay, that's a PD array. Okay, it's open, left it open, fine. Go higher. Okay, this one touched it once, you know, went higher, touched it twice, went higher, touched it 3 times, and then boom, Asian range high. Now, when I'm trading, let's say a New York reversal, for example, right? My target, maximum target, is the Asian range high. I will not try to aim anything more than that. Unless London has taken the, like in this example, if London had taken the Asian range high, then went lower, and then New York did a reversal, then yes, I'm gonna go for the London high, right? In this scenario, boom, I'm out at the Asian range high, and I don't care where it goes after that. Okay, especially if I don't have a, if I'm not 100% with a higher time frame, I don't even want to hold it. I don't even want to hold a small position on. I'm just like, I don't care. I'm just going to, boom, just get it out, and just get out and just take my position off, right? But what is the most repetitive thing you guys are seeing? That's what you guys need to, I want to say, think about, basically, is the most repetitive thing you'll see when it comes to market maker sell and buy models is there's a few entry techniques that will happen again and again and again. And the main ones for me are fair value gaps that are paired with either an order block or a breaker, or just fair value gaps on the buy side. So I have a fair value gap, I take it out, I think, what's on the opposite side? Now, if you know what a reclaimed block is, which I spoke about on the dollar, let me just pull that out for you guys. Let me just pull a dollar chart out. Yeah, there you go. A reclaimed block. Okay. You take that. So a reclaimed block is, from my understanding, and I know someone's going to say this is wrong, but when you split the market maker buy and sell model in half, let's say we split it in half over here, all these candles you see over here, right? These down candles, essentially, on the buy side of the curve, you take them across, right? And that is where I start looking for fair value gaps and other PD arrays to form. Now, again, you'll see. I don't like taking these small ones. You know, they got to have some bulk on them. And you'll see if I take them across. You know, what's forming inside that? The order block. What's forming inside that reclaimed block? The fair value gap. That is why I have them marked out. So when it comes to trading them on the lower time frames, you'll know where the fair value gap's kind of gonna form. And what do I mean that by that, right? Let me find you guys an example. I remember going through that trade I did, the same with the ICT what trade. So look. Again, just another example here as well. This is like the consolidation before it going for the turtle soup. Smart money reversal, price trades lower, take the bulk of the down candles, take that across. What am I doing? You got that fair value gap over there, price goes lower. Boom, look where I'm selling. I'm selling within that. I'm selling within that, and I'm happy to do that. Just, I might miss the fair value gap. To me, oh, I miss it, but I can still get in my short over here. I'm okay with that. I'm not going to enter in the middle of nowhere down here somewhere, right? As long as it's in a couple of pips where my entry was, if I miss it, I'm like, okay, cool, I can still get in. And boom, there I am. Look at where my stop loss is, and this is where I got out. Again, repetitive, right? But what I'm trying to do is I'm trying to find the example that I'm looking for. You're going to see another example here in a second of... No, it's not right here. Am I going forward or backwards? Okay, I should be going this way. My bad, guys. What I'm trying to do is I'm trying to find an example, right, of where I've done something very interesting of using reclaimed blocks, but I'm just trying to find them. And as you guys can see, I send out a lot of stuff. Again, just another scenario here, right? We have the Asian range here. London doing the turtle soup scenario, taking away that high over here. Daily order block. Look how much it helps to have a higher time frame, right? Even if price is consolidating, the higher time frame is king, and I'll tell you why. I have a daily bearish order block. A high has been taken. Fantastic. I'm in the New York session. I see a breaker. Yeah, take that. I see a breaker. I take that across. I was short somewhere within this fair value gap over here. I must have been short, right? I was short. You guys can go on my YouTube and watch that. Even though it consolidated, I did not give up my bias. Why is that? Because I had a higher time frame behind me. When you're just trading off 15-minute time frames, 5-minute time frames without a bias, you'll know very quickly whether you're onside or offside. You don't want to sit through consolidation because you might have taken a trade on a 1-minute time frame, but the daily bias is opposite to the direction you place the position in. So you might be shorting it, but it's a long, and it causes unnecessary panic. That's why even when I'm trading on 1-minute time frames, there are times I will do it without a bias, and that's normally when half of the move has already happened and I'm just trying to catch the low-hanging fruit of the market maker buy and somewhat, or just trying to catch 10-15 pips, right? But when you've got the higher time frame, like here, daily order block, turtle soup scenario, previous day low over here, you've got one negative standard deviation of using the advanced breaker theory. I can sit through that consolidation with no problem, because I know the reason I took that trade is I had the daily bias. If I am then wrong and I get stopped out, I am okay with that, because I'm like, okay, I did the correct thing. I looked at the daily bias. I thought it was bearish, and I got, if I got stopped out, I got stopped out. As long as you followed your rules, right? And as you can see, it's consolidated. News came, and boom, it just sank. It's the best way to put it. And yeah, that's that. Let's have a look. Again, this is another scenario of a reclaimed block over here. It didn't really take out that high, just which kind of got it. But look, take that across, guys. You've got that big SIBI, and you'll see, take about 50% of that, take that across, round about here, boom, it goes lower, yeah? And I use reclaimed blocks a lot, and you guys will see that. Again, another SMT with GU, turtle soup scenario, Asian range low taken, price goes higher, here's your breaker, your fair value gap, here's the long came after, because I was looking at a 5 minute, or was it 1 minute order block? Boom, went long, and it's the previous week's high over here. So the main thing you guys see here is me touching upon the Asian range and the London range and the New York. Now, when I'm trading the London session, for example, in this scenario, and I have the Asian range, and London takes out that Asian range and I am bullish, I can start looking for London longs. I'll be like, okay, I think London has, set the tone, right? Sometimes it won't do that, but I prefer it when I have days where it will take out the Asian range low. Like, for example, we're bullish, right? And again, guys, look what's here, a daily bullish order block. I honestly mean this when I say if you even found 1 or 2 trades with a daily order block or a daily break or some sort of daily PD array, you would not need to trade 5-6 times a month. You would take setups like these, 1% risk, I would say, or 0.5 or whatever you feel comfortable, and you'll get the most out of it. Again, this was a 1% risk trade, and you'll see the risk was 1,000 and the reward was 3,000. So you get that twice a month. That's 6%, right? But I'm not saying aim for 6% every single month. I'm saying, if you had a big amount of capital, you can do with less percentage. But again, that is for my psychology and numbers video. But the repeating thing you'll see when it comes to trades where it moves in your direction, boom, quickly. I mean, look how it moved from that breaker. Look how quick. 1, 2, 3, 4 15-minute candles, boom, to the upside, right? It's because you have the daily order block. I've worked with the Asian range. I've got the SMT with GU. There's so many things working together, right? And this is on a 15-minute time frame. So to a lot of you that say all you show is the 1-minute time frame, it's too fast, I don't have time, I got work. I mean, 15-minute time frame right here. And it's the same thing on the 1 hour when we get to that. Again, that's proportion blocks. Again, you guys will see the same thing. Daily order block, SMT, proportion blocks, order blocks. Obviously my computer broke. Let's just wait for what else is there. Just looking at a few things for you guys. Again, another scenario right here, right? The thing is, I'm pulling them out of Telegram because a lot of you ask about these trades and I don't answer them. I just say, I'll touch upon it, And I thought, let me do them all in a video right here, right now, right? So, original consolidation. I mean, again, look at this 4-hour order block, right? I've got the smart money reversal. Yeah, price has gone higher. Look, once it breaks that, that's like I know you guys say market structure shift and all that kind of stuff. So that's what basically happened, right? Fair value gap, breaker. The fair value gap is the most powerful thing you can have because as soon as price trades into it, boom, I'm in, right? Again, take the order block across, buys, reaccumulate. Now I'm gonna touch upon what I was saying a moment ago, which was reclaimed blocks, one of those kind of things, right? Now, there are times where I'll miss this, I'll miss these entries, and I'll still want to catch 5-10 pips. Most likely it'll be like 10 pips, something like that, right? And I will end up trading from here, the reaccumulation. Now, if you take this candle across, this up candle, before this down move started, take that across, and you'll see this PD array form. Now, if we take a line across from that, boom, 1, 2, order block, low hanging fruit, take out those longs over there, right? Stop loss can be below over here. And the reason I would trust this is, look, we've had the fair value gap, boom, price should not come down here. Order block, it's consolidated, it's going to round it. It's not left any fair value gaps, boom, 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 boom. This candle here is come down, hasn't completely closed it, but that's fine. I'm going to take that as a, as it's just come 50% of the fair value gap, it's gone higher. Where's the next PD array? This order block. Simple as that. That's why my stop loss can go here. If there was a fair value gap here that was very wide and open, my stop loss would go under that if I was planning on taking the trade. But again, you got to think, can't have, you know, I'm not really going for a negative RR, to be completely honest with you. So here, I would take that across, put my stop loss above here, go for that take profit, right? That's what I meant by when I miss it out, I end up getting in with those kind of moves. And just going back, seeing what other stuff I can show you guys. Again, for those of you who asked, this is the daily time frame. This is a market maker buy model right here. Beautiful market maker buy model. Look at this reclaimed blocks. Take them across. It's in line with the weekly fair value gap. 3 Indians. 1, 2, 3. Boom. Now, it's so easy for me to say this, yes. But again, anyone who calls it hindsight is being foolish. You guys can see the live trading sessions on my YouTube. The trades and everything is on my YouTube channel. But I would definitely go back and look at reclaimed blocks and really look at price action and just think, right? Again, let's go find more examples for you guys. I think this was in my one shot, one kill era, where I wasn't really focused on 1 minute models as such. Yeah, wow. Anyways, so look, let me just take this across. Sorry, guys. Boom. So yeah, look, when it comes to market maker buy models, market maker sell models, it's not going to look 100% the same, but it's going to be very similar again and again and again. I mean, that market maker sell model we just spoke about on EU post news is this fragment of price action compared to all of this. So it's definitely possible to do in a lower time frame. A lot of people sit there and they complain a whole lot, you know, but it's on every single time frame, you know. And let's just look over here. Where was that price action? Just going to show you guys something. So I have to load everything up, which is annoying. Was it on the 1 minute? Sorry guys, I'm just trying to find something for you guys. Wouldn't have been here. Friday was a reversal, so it was definitely not on Friday. Let me go on GU. Messy charts, honestly. Another example is right here. Another example is right here of a market maker buy model. So we have original consolidation. So you've got the Asian range, which gets taken out. I want to see if I can explain it in a way, right? So now, Asian range, London low, right? We have a lot of price action, and that is your target. So what essentially I'm doing is, there would have been a reason for this to be a London low. It would have been either an SMT, or I would have seen it's gone below Asian range and I'm overall bullish. So I would have waited for all of this price action to happen. I definitely would not be entering here. I would have waited for this price action to happen. Once it's gone above this high, my eyes straight away, if I'm being completely honest, would have just... Let's have a look. I would have been a buyer from here, if I'm being honest. This fair value gap. That's where I would have bought. I'm not going to lie to you and say I would have waited for this low to be taken out, because I wouldn't have. This high goes, fair value gap, stop loss would have been under this low over here. Wouldn't even be this low, because this has been filled in over here. I don't want this low to be broken. So boom, price goes higher, does its thing. And then what I started doing is I start taking like these candles like I was talking about across. And as you can see, take those candles across. Boom. Yeah. And I'll do it almost to like every one of them. just to see where potential PD arrays could form, potential order blocks, potential this, potential that, right? And then eventually that would have been taken out, and then again I wouldn't have really cared of what happened after that. But my main point when I'm trying to say about market maker selling buy models is firstly GU's just been consolidating. It's probably the worst pair to show you guys anything on. But it's that don't dive into the 1 minute time frame if you cannot understand the 15-minute or the 5-minute, right? I would genuinely start off on a lower time frame. I mean, sorry, a higher time frame first, like 15-minute. You can go up to 5-minute. I wouldn't suggest anything, other than a 5-minute. And again, you're gonna see on a London close scenario, this was definitely a news release, and you'll see. What's it? No, I don't want to choose a plan. Oh, I don't want a plan. Okay, that's nice. The reason I'm not buying a plan is really simple, to be completely honest with you guys. It's because I'm waiting for the month to go. Well, there's no point in me having a plan when I'm not going to be trading, right? But anyways, what I would have been able to show you is a market maker sell model within this price action over here, which a lot of you won't even believe it's there, but it's there, just not on the 5 minutes, on the 1 minute. So sorry, there's just a lot of people horning outside my house right now, which you guys can't hear. But again, I'm going to show you a few more examples that I have. So many examples. I mean, this being one of them, right? And when I was talking about how there's no fair value gap, look, you'll see a and this is on AUD USD, so Australian dollar against the dollar index. And this was actually in October 2021. And you'll see daily order block, SMR, breaker. Is there a fair value gap? There's an order block. As price now it trades. So again, like I said, from 2021, I've grown a lot in terms of my trading entries, in terms of how I can enter, in terms of different kind of scenarios. I don't always wait for a fair value gap. If I am, look, let me put it this way. If I have a daily order block or a 4-hour order block or on a 1-hour order or some sort of higher time frame PD array, and then I jump on a 15-minute, 5-minute, I will not always wait for a fair value gap. I will simply, depending on price action, like this, total sweep's done, prices gone higher, broke that structure, great. As price is trading lower into that breaker, I'm not going to wait for the fair value gap. I'm just going to go long, boom. From there, stop loss is going to go over here, take profit's going to go above here, and again, you guys can see what happens, right? But this is why I talk about the higher time frame, because you're not going to get far without it, in my opinion, right? Again, and that this was one on oil, right? Over here, we have the total soup scenario, yeah? SMR, we have a breaker, fair value gap, price goes lower. Now take some of these up candles. So take like this beefy one over here, right? Take that across, comes in line with this order block over here. Does it not? Boom, look at that. Take that across. Order block runs lower. These reclaimed blocks, again, if you guys know about the charter mentorship, which I think ICTC is going to put on, model 6 and 7, I would highly recommend you guys go through that, because that will definitely help you a lot with understanding what reclaimed blocks are, because a lot of you may not understand it through what I am saying. So again, these were the early days. Over here you had the SMR, you had the breaker, you had the fair value gap. Again, take like the big beefy candles here, the up candles across, and you'll find something. Now, not every single time there's going to be something there. I'm not going to sit here and lie like it's like a 100% pass rate, because nothing has a 100% pass rate. But it's almost like, how do I explain this? As price is moving, right, I start to anticipate things. So, I mean, that was a beautiful scenario, but I'm just trying to show you. What I'm trying to say, okay, is this, right? Let's say I'm in a market maker buy model. Let's pull out a chart. Okay. Let's say we are in a market maker buy model. Where is the 1 hour time frame? Because this will. Boom. Okay, so we're here. Let's just take all these lines off, right? We're going to take all these lines off. What I will do, and I do this a lot on a 1 minute and a 5 minute, not so much on a 1 hour, because I haven't traded the 1 hour in a long time. I will take, like I said, these up candles, I will take them across like that. And as price is still here, down here, pretend none of this has happened. As we're trading above it, I'll start to think, okay, around this area, if a fair value gap forms, if I see an order block on like maybe the 5 minute or the 15 minute, if I see something, I can use that PDRA to go long on. I'm already thinking. So what I've done essentially is I've split the curve in half. I've got my target and I've started thinking, okay, cool. Price has gone higher, price has gone higher. Right. Is there another way to enter? Fair value gap. Okay, we've got a reclaimed block. Let's take that across. Is there a fair value gap that's going to form? Okay, nothing forms. Let's see what goes higher. Okay, price is going higher. Oh yeah, I can see something that's formed. Take these candles across. Okay, cool. Decent place to buy from. Let's see how we react. Boom, we get that reaction. Again, another order block over here. Reaction. Boom. So I'm already thinking, before this even prints, I'm already starting to think where could the next PD array form, and this kind of, I want to say, skill will come with time, right? Some of the trades you'll see on my YouTube, you'll see that some of them I've typed out expecting a fair value gap to form or some sort of PD array. I don't know exactly what PD array is going to form. Could it be an order block? Could it be a fair value gap? But I expect something, right? And if nothing happens and it just absolutely runs, then it runs. Like, I'm not God, right? So I'm just playing the waiting game, and and a lot of you underestimate the waiting game. A lot of you underestimate being patient. You underestimate just letting price naturally move and going with it, and that's where a lot of people go wrong. So there's a lot of, again, if you go on my YouTube channel, you're gonna see like everything is pretty much a market maker buy and sell model. Everything, you guys will see all of these trades. You'll see here I've got the market maker sell models and buy models with the commentaries, and you guys will see obviously the weekly breakdowns, which now I'm going to be posting a lesson there. But when it comes to market maker buy and sell models, you need to have set of rules when it comes to how you're going to enter. Like, you can't just say I'm going to enter on every order block or every this or every that, right? There needs to be some sort of rules, and I actually do have certain rules. I'm not going to show you my whole rule sheet, but I will show you. So my entry techniques for a market maker buy and sell model, for a lot of you asked this, these are all the ways I can enter a market maker buy and sell model. Now, a lot of them I use on the 1 minute to the 5 minute time frame. I don't really use them on a 1 hour as such, so this is more for the 5 minute and the 1 minute time frame. First things first, a breaker with a fair value gap. If I see a breaker with a fair value gap, ladies and gentlemen, that is probably, I'm going full margin. Nah, I'm joking. Don't no one listen to that. When I see a breaker and a fair value gap, I just say I have been blessed today, because that is my confirmation tool of all confirmation tools. That's like the god of my entry technique. Okay, and you guys will see that. You've seen it. You will see it. But if you go through all the photos on Telegram, you'll see the break on the fair value gap. Oh, that just comes in clutch. So that's like my main way. The next one is reclaimed blocks. Okay. No, wait. I'm not going in any order, by the way. I'm just reading out what I have here. So next one is reclaimed blocks. Like I just showed you here, I don't just enter off a reclaimed block randomly. I wait for a PD array to form, maybe an order block, maybe a fair value gap, whatever it is, and then I look to trade off that. Another way I trade is institutional order flow entry draw. Now, how do I know if price is going to do an institutional order flow entry draw? Because it will be paired with a balanced price range. If you have a balanced price range, paired up. Basically, if you have a balanced price range, let me put it this way, there's a very high chance that will be an institutional order flow entry drill, meaning it will just, let me show you an example of an institutional order flow entry drill. Okay, long story short, pretend this was a fair value gap over here, guys. Price will just straight into it and come back down. There's no waiting around. It's almost like it's very wiki, basically. I mean, I don't even think that helped a lot of you, but you know what? Let me just find a picture because I know someone's gonna bother me after about you just talked about an institute order flow entry drill. You didn't mention what it is. What is it? So I'm gonna find it. It's this. It's basically, in long story short, it's this. It's when price just comes into like a fair value gap, basically, but there's no body, there's no nothing, there's no staying around. You either get in that entry or you don't. It's just boom, boom, right? But what I'm trying to say is I will enter like that as soon as it comes, because a lot of the big question I get asked, yeah, is how do you know which fair value gap it's going to go into? How do you know which fair value gap it's, you know, going to react off from, or is it going to fill in the fair value gap? If there is a balanced price range, and I'm not going to touch upon what balanced price ranges are because that's a lesson in itself, and ICT has explained that on his YouTube channel. If you know what a balanced price range is, you will know that when you have a balanced price range, and if you look on the buy side of the curve and you see it, balanced price range, take that across, you will see an institutional order flow entry drill, right? Most likely that is what you will see. And when I see that, that's when I know, okay, if price comes into that fair value gap, I'm going short or long from it. I don't need to wait for any confirmation. That being a balanced price range is a confirmation. My next entry technique is an order block with a fair value gap, right? And that most likely will appear before the final run of the move. I'm a bit gutted that we didn't get to that high. I do think we're going to just work into this BISI and then go higher, but I don't care what happens for the next month. I'll be completely honest because I'm not trading. But in most scenarios, it would have been order block like here or an order block here. Take the trade off there and aim for that high over here. That'll be my final run. Again, pretend this was a 1 minute time frame. That's what I'd be aiming for, basically. But obviously, this is a 1 hour. And I know it's an OB with a fair value gap. And what also mean is a normal order block like this, a normal breaker without a fair value gap is absolutely fine as well. I just prefer it when it has a fair value gap. It just makes it so much stronger. It just gives me all the confluences. It gives me everything. But those are the main ways I enter a market maker buy and sell model. And it's... I want to say that is pretty much all my entry points. I don't think there's anything special in my entry points. I think I just repeat those entry points again and again and again and again, to the point where people ask me, how do you still do it? But it's like, it's the same thing I've been doing the whole time. Now, before I even go ahead and try and finish this video off, I just want to apologize if anyone found it a bit hard to understand. I mean, making lessons is a bit new for me. So any feedback would be highly appreciated. You know, what I could have done better. Again, I'm all for feedback because next year, ladies and gentlemen, I want to grow Intuition FX to another level. You know, I'm not backing down. I want to really take it to the level it can be and the level it should be at. Hence, if I did not take a break. So any feedback would be highly appreciated. And a lot of you are going to say that was a very simple lesson. And while I agree with you, I would say it will fly over most of your heads because most of you weren't even listening, or most of you have just got it on in the background. But a lot of gems were still given in this, whether you think they weren't or not. It depends on how much you start backtesting what I've said. And it also depends on how much you've listened, right? Because I've told you my entry model, basically, in this whole video. I've told you what I look for and how I enter, right? And having a rule-based system is the way you're going to do that. You need to have what you need to do, right? Now, Here, let's get to the part on how to actually execute these market maker buyer models and sell models. First things first, write down your entry techniques. It doesn't have to be everything I said. If you try and use everything I said, you're unlikely going to understand it. And I want to tell you why I say that. I started off with saying I'm only going to trade a breaker and a fair value gap, or an order block and a fair value gap. Those are my two only entry points. Then I added to myself institutional order flow entry drill with a balanced price range. Then I added a reclaimed block. Then I said, you know what? Sometimes you don't need that fair value. This is over 2 years. 2 years ago in 2021, October, November, well, I started Intuition FX in August 2021, is when I was using breaker, fair value gap, and order block and fair value gap. Now, I'm using more things. It's taken me that long just to add certain things into the equation for me. And it might take you a lot less than that, but start with 1 or 2. Don't start with so many techniques, because you're going to try and do so much, you're not going to be able to master one, right? Like, if I see a break and a fair value gap, boom, I don't hesitate to take it. I say, I know this, I'm going to take it. And if I get stopped out, I get stopped out, right? But I'm going to take that. If I see a balanced price range, oh, institutional order for entry, I can trust myself taking these entries. I don't have to second guess. I don't need to sit there sweating, feeling nauseous. And, I've been there, guys, trust me. So I would start off with the simple ones, like a break and a fair value gap. That's what I need for, my market maker buy sell model to be okay. Or I need a fair value gap with a balanced price range. Or I'm going to use reclaimed block. I think if you're still trying to understand the market maker buy and sell models, start with a breaker and a fair value gap. That is the one thing I'm going to want to start with. That is probably the easiest thing to find. And if you can't see it, you don't trade it. That is as simple as it gets. A lot of you will sit there and still ask me, what if you don't see a breaker with a fair value gap? Guess what? Then you don't see it. What does that mean? You don't trade it. It's very simple. It is very, very simple. But again, I'm not going to talk about psychology, but I'll just quickly say we humans ruin our own, skills, and we ruin our own lives, is what I'm saying, by doing complicated things for no reason, right? As I mentioned, start off with one entry point. Start off with a breaker and a fair value gap. That's it. That's all you got to do. And if you don't see it, you don't trade it, right? But I can guarantee you, you will find that at least once a week. At least once a week, you will find that, right? Now, are you going to find that once a week on a daily time frame? Probably not. Are you going to find that once a week on a 1 hour time frame? I think you can, provided you got more than one pair, maybe 2, 3 pairs. Fair enough. Do I think you can find it every single day on a 1 minute, 5 minute time frame? Yes. Does that mean you can trade every single day? No. But what I'm saying to you is start off with just looking for one thing. Because look, here's the thing. If you go into the chart and you're new to market maker buy and sell models and you're just trying to understand it, and you sit there and you try and find every single one of these entry techniques that I just told you, your mind is not going to be focused on perfecting one way. It's going to be like, okay, here's a breaker with a fair value gap. Okay, but it missed out. Here's another fair value gap. But okay, no, where's the balanced price range? Where's the reclaimed block? Okay, but here's the order block. You're going to try and muddle it up so much, yeah? You're not going to be confident with any technique, right? Focus on that break and the fair value gap. Keep trading it. Keep taking it, even if it's on paper trading. Keep back testing it. Keep paper trading it. If you live trade it. Whatever you want to do, keep trading that one technique. When you've come to a point where you can trade it without feeling any emotion for it, or you can just say, oh yeah, break a fair value gap, I know this, boom, and you can trade it, and you can get stopped out and feel nothing. Then you can say, okay, how can I improve now another entry technique? What if I missed the break and the fair value gap? What's another way I can get in? What if there is no break and fair value gap? What if it's just an order block you can see? What if it's an institutional order for entry drill that you can see? What if you can see that, oh, like, again, perfect scenario here. What if you can't see the break and the fair value gap? Price has gone up. You can see the reclaimed block. And like, can I see an order block? Yes, I can. Does it have a fair value gap? No, it doesn't. Can I take the trade? Yes, you can. Why can you take that trade? Because 2 things have happened. Number 1, you've gone through the price swings and determined this could be a breakaway gap. There's a potential. And again, what happens if you get stopped out? Guess what? You get stopped out. You can look. we are trading off a daily narrative here. We are not trading off a 1 minute narrative, a 5 minute narrative. On this 1 hour time frame, we are trading off this daily narrative, the daily bullish order block, right? So when we get here, and if you think, okay, reclaim block, order block, and you put your stop loss over here, but you get stopped out, that doesn't matter. You followed your entry technique. You had as long as you have a reason to enter, which you can justify, you'll get far. If you can't justify why you entered, it's problematic. And this is why journaling is so important. Because if you do not journal, if you do not write down why you took these trades, you're never going to understand what's going on inside your head. Because I think when we press buttons, it's normally a reflection of what's going on in the head. And especially if you're someone who blows counts, who loses a lot, and all of those kind of things. Trading is going to reflect what's in your head. So if you've got a messy head and you've got a lot going on inside, you're going to reflect it by pressing buttons and trying to get revenge on the market and trying to take your anger out, right? Again, psychology, not going to go into it. But journaling is important and you guys need to do it. So you can sit there and you can determine, okay, I tried to take a position of, I tried to trade off this market maker buy model, reclaim block. It didn't work. What did it do? It went to the fair value gap or the CB below it, and then it went higher. Okay, fine, noted. You note that down. And if you keep making the same mistake and if you keep making the same error, then you got to check your understanding. Am I really looking at a reclaimed block? Am I missing something bigger? Like, that's something you have to do, right? Sorry, guys, just. But yeah, so you need to write these things down. And like I mentioned, you need to focus on just one technique, the break and the fair value gap. You start with that, and slowly you can start with more. And I'll be completely honest with you, you never need more when it comes to these entry techniques. You don't need all these 4 or 5 techniques that I told you. But a majority of the time, I still use the break and the fair value gap, or an order block, or it'll just be a fair value gap. I don't use reclaim blocks all the time. It's very rare I use them, but I will use them in a scenario where I've missed majority of the move. But I'm like to myself, if it comes down here again, I don't say to myself, I've missed majority of the move and now I need to chase it. No, I say, I've got this reclaimed block. I can enter from here. Will it come down here first? If it doesn't and it goes away, it goes away. If it does come down there, I can go in. Right? I have all of these ways of trading because I've missed moves before, but I wanted to find a way to still be able to get in without jeopardizing my rules, without jeopardizing my mental health. I wanted logical entries for doing certain things, and I think that's what having these entry techniques gave me. So I think that's very important. I think you guys need to start with one, and then slowly work your way up. It's you know what, I'm gutted that I can't go so far back in time. I should have thought about this one before because I would have loved to go on the 1 minute time frame and shown you guys a bit more. Let's see how far back I can go. Actually, we'll go on the 5 minute. There's bound to be something on the 5 minute that I can show you guys. There's so many like 1 minute time frames. Wait 1 second. I'm pretty sure. Wow. Okay, let's find the 5. I'm gonna find you guys something on the 5 minute if I can. Wow. I guess I have been a freak on the 1 minute if I can't find anything on the 5 minute. That's crazy. Um, but yeah, no. Again, there's that 1 minute, 5 minute time frame here thing I mentioned to you guys here. But my biggest, I want to say getaway, but again, guys, London low over here. There was an SMT. I think there was an SMT here. Order block, take that across. Stop loss should have been here. Look how deep it goes in. Goes. Boom. Runs higher. Right? The reason I showed you that is because you would need to know that London had made the low, and again, that will come with time, that will come with experience and bias. And again, you will have seen London low, order block over here, and where's the fair value gap? It's here, right? So even if you did enter off here and your stop loss was here, you can still get your take profit here. I mean, price flew, but see, I'm trying to put it in a way to you guys, right, where it's so important. I mean, look, that was the 1 hour order block that I was talking about, right? That was the 1 hour order block that I was talking about. And that entry was on a 5-minute time frame. So what I always suggest is start on the daily. First thing you guys need to do is start on the daily time frame, right? When you're on the daily time frame, what you guys need to do is you need to get a daily bias. You need to, okay, here's a daily order block. Here's a daily, break or a daily fair value gap. This is where I'm going to take a trade from. Once you've got that daily level, then you can chop down to like an hourly and just think, okay, if you want to be a one shot, one kill trader, don't go anything lower than a 15-minute time frame. I think even 1 hour, I would say, is the maximum, but you can do 15-minute. I've been there. So 1 hour, 15-minute. And then you can see, okay, can I see a market maker sell model or a buy model forming? For you guys in the 1 minute and the 5-minute, the way I go about this is there's times where London will do nothing, and I'm like, okay, that's completely fine. I'll just let London do whatever it wants. And then New York will come. New York is going to do one of two things. It's either going to reverse or it's going to continue. Once you figure out what it's doing, you'll see the market maker buy and sell model there. Okay, when I start doing, I want to try and do live streams if I get time, but when I start doing more like live trading sessions and those kind of things, I'll be pointing out exactly what I've been talking about here. And I think it'll make more sense there. This lesson is just one of many to come in the future. Like, I want to build on it is what I'm saying. Like, this is the first lesson I've done on market maker buy models and sell models on my YouTube. And I want to develop on this, which for example, when I go and do like a live trading session and I'm talking, everything that I've spoken here, I've made notes on what I was going to speak about. So when I'm going on my trading sessions and I'm doing them live and when I'm speaking, what I want to do is I want to incorporate what I've spoken to you guys now in those live commentaries. I want to sit there and go, okay, as you guys can see, I can see, I think a market maker sell model is underway. Here's a reclaimed block I spoke about. I want to use it in real time. And this is why I thought, you know what? I don't want to just disappear for a month and say, hey guys, I'm taking a break. I want to start with lessons and start building them in and just build a foundation for people and then grow on them. This isn't going to be the last ever video I do on market maker buy and sell models. This is the first. So it may not be the best video you've seen. It may not be the most helpful video you've seen. But it will be something that I will definitely be building on as time goes forward and as time goes on. And I do more live commentaries. I do more trades. And, we move throughout the next year where I can really implement this stuff in real time and showing you guys, because I think there's no better help than seeing it in real time. It's very easy to make videos. I agree. But doing it in real time is where the real help comes in. But again, like I was mentioning, ladies and gentlemen, I hope you enjoyed this video. I really hope you guys enjoyed the video. And if you did, I would really, really, really appreciate it if you guys just give me a like, subscribe, share the video with anyone who you think this might help. Again, like I said, apologies if, you didn't find it useful, but I can assure you, and I can promise you this, that going into 2024 next year, there is going to be no shortage of content from me. Again, like I said, the very things I've spoken about in this lesson, I am going to be building up towards, when I do my live commentaries, when I do my not live commentaries, but my live trading sessions. I would definitely be implementing a lot of this and showing you guys in real time how I'm anticipating a fair value gap before it's even formed, so you guys actually see it. So this is on YouTube, so mark my words, next year that's happening. And this is the evidence there. And number two was, again, like I said, I really appreciate you guys watching. And yeah, I hope you guys find it insightful. Next week's lesson, just before I get to it, let me see what I've got. I've got an SMT lesson planned, so that's going to be on SMT. I don't suspect it'll be this long as this video here. I think market maker buy and sell models I talk about a lot. But again, when I talk about SMT, it may just be half an hour video, because SMT is really important if you want to be on the right side of the moves and if you want them to be quick. And then the week after that, it's going to be about psychology and the numbers game. That one I know is going to be long because I can talk a lot about psychology, especially as someone who has been through a lot of, I want to say like, I don't want to say psychological issues, right? But I just want to say I was my biggest enemy, right? And I really want to talk about that with you guys. And that's going to be the last video. It's going to be Sunday the 31st. And I feel like that's just going to be a great way to end the year off. And I'm still thinking about how I'm going to do the Sunday the 7th video of a lesson. So if anyone has any recommendations or what they want me to go through, then please let me know. Otherwise, I will find something to talk about on that. But yeah, again, like I mentioned, with the market maker band sell models, always start from a higher time frame. I know people say, "Oh no, like you don't need, if you're trading on a 1 minute, it's just quick anyway." I get it, I understand, right? But there's no better feeling than trading on a 1 minute, being on the same direction as the higher time frame. Because believe me, when price moves in direction in the higher time frame on a 1 minute, it will move and it will hit your TP or SL faster than you can blink sometimes. Okay, so again, like I mentioned, guys, for like the 5th time, I will definitely be touching upon this as I do more sessions, and again, I will make another lesson sometime in the future, going in, even in more depth than I did here. But this is just the foundations for you guys who just needed some extra little bit of help with the market maker buy and sell models. And I hope you guys find this video insightful. So I will see you guys next week on a lesson about SMT. Take care, and I hope you all enjoy a lovely week ahead of you. Peace.